Hi there, welcome to the Monday, September 26th interest rate update. Not a lot of change since last week. Markets still remain very volatile with the Eurozone crisis going on. Fixed rates dropped a little bit actually in the past week. We're down to 3.29% right now for a 5-year fixed. Last Monday it was 3.39. So one of our lenders actually dropped by 10 basis points. The bond yield closed at 1.35% on Friday, which was a 20 basis point drop over the week. So we may even see this week some other lenders dropping their fixed rates as well. But again, 3.29% is an amazing rate right now for 5-year fixed. We also see some flexibility that's available in the shorter term fixed rates. So the 3 and 4 year term, which still remain below 3% at 2.89 and 2.99 respectively. There's still a great opportunity for some lenders to really pick up the slack there and even go a bit lower on those ones. We haven't seen too many lenders competing for those shorter term rates at this point. In terms of variable rates, I spoke of last week of the discounts shrinking on those rates. That continued throughout last week. We saw TD Bank decrease their discount to 25 basis points. So we're at 2.75% right now, a TD Bank variable rate mortgage. All we have to see is one or two increases by the Bank of Canada on the prime rate, and again you'll be worse off than if you went for one of the fixed rates at this point. So variable rates are a tough buy at this point. Lenders did not see them to be very profitable, so they decreased the spreads on those. We may see more of the tightening up happening this week as well. The best broker rate for a variable rate mortgage right now is prime minus 0.55%. So that is a 2.45% variable rate mortgage. Again, even with this as the lowest variable rate, we still see the opportunity that if in the next couple of years prime rate does increase, then you're going to be about the same as where you would be with a fixed rate mortgage at this point anyways. In terms of the prime rate, we don't see that changing in October's Bank of Canada meeting. No economists are forecasting changes for the next year or so even, which can change at any time, of course, as the world economic situation and Canada's own situation increases or changes. Of other note for variable rate mortgages is the variable rate qualifying rate has decreased to 5.19% from 5.39%. This is the rate which high ratio variable rate mortgages are qualified on. So if you want a variable rate mortgage and you don't have a 20% down payment, you'll need to qualify on the rate of 5.19%. This is done as a CMHC mandate to ensure that when rates go up, you're still able to afford your mortgage. So they use this higher rate to determine what a standard level of affordability will be in normal times. You don't want to think about having to pay 5% of your mortgage, but it is a reality in the future, so they make you qualify based on this number. So that decrease in the past week will make it a bit more affordable to qualify for variable rate mortgages. For the rest of the interest rate roundup, check out the accompanying blog I have with this video, and thank you for tuning in.